Okay, hello everybody. Welcome to Korean Atlanta Mentorship. You're watching another clickbait video using Dave Ramsey's face, and we'll call this video Velocity Banking Therapy Sessions because Dave Ramsey likes to yell at people a lot and call them stupid, right? And one of the things he'll probably yell at you for is that if you don't follow every single steps in that same order of the baby step, which is like his debt payoff plan and creating wealth, he's going to yell at you. Now, this plan is pretty solid, I'm going to admit, but I'm going to say that we shouldn't do step one. That's just my opinion. What's step one? Save $1,000 in a beginner emergency fund. Now, I say, why not just skip to step two, which is pay off all debt? And I would even wait for the house, right? He says pay off all debt except for the house and then save 3 to 6 months. So it's like steps one and three are totally unnecessary. But I feel like he's going to call me stupid. In fact, let's just take a look and look for Dave Ramsey yells stupid. Stupidity is alive and well. Somebody actually calls Dave stupid. And then there's a compilation of Dave just ranting about people being stupid, right? Like that's one of his favorite words. All right, so let's do this before we start. Let's ask ChatGPT. Would Dave Ramsey think it's stupid for refusing to save $1,000? Wow, two responses. This is like the first time I've ever gotten two responses to ChatGPT. Let's see what the left side says. Uh, Unwise, crucial. So it's blah blah blah. Provides a buffer for. So if somebody refuses to save initial $1,000, Ramsey would likely consider unwise or stupid. Yeah, right. Um, so I think the right version, response number two, is a little bit more blunt than response number one. So Dave Ramsey would yell at me for being stupid for refusing to save $1,000. Correct? He might not literally yell, quote, yell. I don't know. I feel like this is like making excuses. It's like, well, he did. You ever have people who do things to you, and then it's like, well, he didn't really mean that. I've seen him yell before, and we got it all on tape. We got it all on tape, right? Where is it? We got it all on tape. Yelling stupid. Just kidding. I'm just joking. So, here's the thing. I'm going to modify this plan. So we're definitely not going to do step one and definitely not going to do step three. And then we're going to jump into step two. And I practice what I preach, right? Because here's a picture of my checking account. And beginning is zero, ending is zero. What do I need savings for, right? Because here's the thing. We're going to do something called velocity banking. And what we're going to do with velocity banking is just skip to step two and refuse to do step one and step three, right? Maybe you'll invest. I don't know. I'm not going to do step five because I think college is a scam. And I think step six is kind of like, whether you do four or six, that's up to you. Some people might do six first because they just don't want to invest because, a paid off mortgage just means you never have to pay for housing again, which is awesome, right? And I like step seven. You gotta build wealth and give, right? So let's just go here. And again, same example as last time. I just like repeating examples and emphasizing it over and over again. And I think this is the best way to present to people certain financial topics and strategies. Like, what is the most extreme case that you can think of? And I love this use case where you got a penny left in savings after all of your debts and expenses, right? uh, Here's the funny thing. I got people just recently this month emailing me about how they're broke and they're making a lot of money, right? One person actually making over 10 grand a month and spending more than 75% on housing. It's pretty crazy, right? I don't think I can help that person at all, but you see all these situations and you're like, oh, just think your lucky stars that, you're not, well, maybe, I don't know. Would I be rather be rich and broke or poor and broke? I feel like both of them have their advantages and disadvantages. Like when I was poor and broke, all I did was study, and then so when I became, I don't want to say I'm rich, but when I came a little bit, have a little bit more money, um, I understood financial principles that would help me, like velocity banking, right? And let's kind of quick review what is velocity banking. All it is debt payoff strategy using lines of credit as your main tool to pay off your debt, right? That's all it is. So, what is a line of credit? It's a financial tool where you can borrow money, pay back, and use it over and over again. So, you might have credit cards. That's a line of credit. Home equity line of credit, personal lines of credit. I got all of them, right? I say that almost every single day. I got all of them. In fact, as of today, I got $268,000 in lines of credit, and I'm still trying to get more because here's the secret. Here's the secret to getting credit, and I keep honing this in because I'm always getting comments like, "Well, who has a line of credit laying around, right, to do this velocity banking stuff?" That's true. Who does have that? That's me. $268,000, and you know why I have $268,000 in lines of credit? Because I got it when I did not need it. And banks don't lend money to people who need it. That's like the secret sauce of understanding if you're going to get credit or not. Like the moment, the problem is, and I'm going to say this again and again and again, most people are thinking of, they're thinking of banks like they think of restaurants, right? I go to a restaurant because I'm hungry. And then they apply the same logic to a bank. I go to a bank because I need money, and if you go to a bank, they'll laugh you out of the they'll laugh you out of the building. Wait a minute, you need money? No, we're not going to lend you anything, right? So that's how I got $268,000 in lines of credit. I got it when I did not need it, and I still don't need money. I still don't need it. What do I need money for? All right, please let me go to the bank. Need it, or I'm going to apply for credit. I don't need it, therefore they granted it to me. Now, obviously, there's a little bit more nuance than that, and I get rejected from credit issuers from time to time. In fact, quite frequently, but I still have $268,000. Okay, now let's assume that we have something called a home equity line of credit. A home equity line of credit, which is essentially like a credit card based on something called home equity. Kind of think of it like, oh, a credit card like based on the value of your home, right? We have $175,000. Okay. Now, we're going to do the opposite of step one of the Dave Ramsey plan. And he might yell at you for this. And even ChatGPT knows that he might not, quote, literally yell at you, but he would likely express strong disapproval. Isn't that the same thing? Like, isn't that people when people make excuses? Yeah, I'm not yelling at you. Don't know, but I express strong disapproval, right? But ChatGPT knows. We all know. That's why we have these therapy sessions to help us with our traumatic stress disorder from when Dave Ramsey yells at us for not saving $1,000. No, I'm just kidding. Dave, I love you. I watch your show a lot, so we're good, right? All right. So let's go back here. So if we go to step one, again, step one is save $1,000 in an emergency fund. Now, if we're in this situation, how long is it going to take us to save $1,000? And what if we did the exact opposite, which is to go to zero, right? So instead of, and here's the thing, I didn't go over the expenses. We make good money, but we went crazy with 10 credit cards, right? 10 credit cards along with a mortgage, and we have $167,000 of credit card debt. 10 of them. I got 18 credit cards, or do I have 17? I think I have 17. All right, but so here's what's crazy. Um, we're not going to save $1,000. Now, if we were on this plan that Dave Ramsey is advocating for step one, right, saving $1,000, how long would it take? In fact, I wrote a table, or I got like these numbers from bankrate.com, put like these credit card numbers, and you can actually generate like payment schedules for minimum payments. Min payment CC calculator, right? Let's just go to bankrate.com right here. And then we just put in a balance. So 5,000 at 30%. So I'm just going to go through this quickly. 5,000 at 30%. Okay. And then it'll generate a payment schedule and show you how much interest that you will pay if you just keep making the minimum payments according to this formula, right? So what you can do is if you want to figure out how much you're paying or what the payment is, you just have to kind of look at this table and update it after every single month, which I did, right? And I did it for all the 10 credit cards. And I found out that it's going to take me 7 months, right? 7 months to save $1,000. Now, what's crazy is that we're going to pay a lot of interest during those 7 months because take a look at this. Um, First month, $125 in interest, right? And then that's for about $100 for about 7 months. Now, whatever the what's it called? The payment is, that's probably going to be because you're paying mostly in interest, right? Or at least 2/3 of it. Let me take a look here. Yeah, 125 to 50. So you're going to pay most of it interest, right? So 7 months, you're just paying interest in order to save $1,000. That's crazy, right? We're not going to do that. We're not going to do the Dave Ramsey plan. I know he's going to yell at me. 1, 2, 3, 4, 5, 6, 7. 7 months. I can't wait that long. We're going to do something else, okay? What we're going to do is we're going to create something called cash flow, which is very similar to savings at the very beginning. The concept is very similar, right? But what we're going to do is use our line of credit as our main operating account. So imagine you had a $175,000, kind of like a credit card, tied to your home, called home equity, right? If you don't know what home equity is, it's the home value, your estimated home value minus all the loans tied to it. Let's just say we have 175,000 for use, okay? Now, right now this savings number and this cash flow number look exactly the same. Income minus expenses. Like, what's the big deal, right? Now, let's go ahead and move these 10 credit cards. Okay, let's move them to right here. Just do a simple debt transfer. That's all it is. We're not making more money, okay? Even though making more money is good, and we're not saving it at all. We're definitely not saving it, okay? So, let's go ahead and move this $167,000 of credit card debt right here. 167,000, right? And so now what we're going to do is calculate the next month's balance. And how do we do that? Well, we got to update this cash flow number because once you move all the credit card debt, guess what? These all go to zero, right? They all go to zero, all 10 of them. We moved all the 10 cards, right? And we went from a penny to $5,345.84 in cash flow in 1 month, right? $5,345. We didn't do this step one nonsense. I didn't save $1,000 in a beginner emergency fund. I didn't want to waste 7 months just to get here and then pay all the interest, all 10 cards, so much interest, right? It's probably $4,000 or $3,000 to $4,000 of interest every single month that we're paying. Instead, we got cash flow, right? $5,345.84 cash flow. And our balance for the next month is going to go down by this number plus the interest of that line of credit, right? And the interest will vary, usually 10%. I have a home equity line of credit at 10%. So I've never seen it change. I've never seen it go to 11 or 12, but 10%, I guess the usual. And the interest rate should be lower than a credit card because you're putting your home as collateral, right? Anytime you provide collateral to a lender, they're going to give you better terms and rates. That's the whole point of providing collateral, home equity. People are like, "Oh man, if you don't pay, they can take away your home." No, no way, no way. You figured out what collateral is, right? That's what collateral is. If you provide collateral, they provide better terms and rates, right? People don't understand that. All right. So now let's go ahead and calculate the next month, which is the previous month's balance plus the previous month's interest minus this cash flow number, because every single month it's going to go down by the cash flow, 5345.84. Okay. Now I've colored this for a reason. I'll show you why. But let me go to this. Let's go ahead and calculate the average daily balance because the interest is going to be based on that. Oopsie. So let me take this average function right here. Okay. And then you multiply it by the interest rate, which is 10%, 0.1, and then you divide by 12 to get the monthly interest, right? That's all you got to do. Okay. Now, let me go ahead and take away this formatting, and I'm going to take away this. Okay. So now all we got to do is copy the formulas. So, you know what's crazy? And I probably need to update this so I could figure out how much interest was paid on month one, right? Because so little of this, from month one to month two, oh, it's $53. Whoop-de-doo, right? But if we do this, again, 1 cent to $5,345.84, right? And so let's just do this, and we're going to copy all of this, copy and paste, right? And then once we copy and paste that, we're going to figure out how long it takes to pay off this line of credit, okay? And this line of credit takes us 37 months to pay off. 37 months. Okay, now here's the thing. When you look at baby step one, he says it's a beginner emergency fund, right? Because he's basically calling you a noob or an idiot. I don't know. Or stupid. No, I'm just kidding. He doesn't call you that. Or does he? Well, according to ChatGPT, he's not, quote, yelling at you. All right. So save $1,000 is a beginner emergency fund. But here's the thing. Why don't we have an advanced emergency fund, right? Because if I'm in this situation right here, Dave Ramsey, again, it's going to take me 7 months to save $1,000. What if I had $1,000 emergency for month one or month two, right? What if I had that? Now, if I use my line of credit as my main operating account, okay, so take a look here. Month one, I'm going to put $1,000 emergency. Okay, give me one moment. So we're seeing that at month 37, that's when the line of credit is paid off. But let's say on month one, I got $1,000 emergency plus $1,000. Bam. The payoff date does not change. Still 37 months. Is that crazy? So my line of credit is essentially my new savings account. I got an emergency. Okay, extra $1,000. I got to take less in my cash flow. But if all the other months are pretty much going to be the same, then okay, we're on schedule. 37 months to pay $167,000 of debt, right? 37 months. How much is 37 months? 37 divided by 12. That's about a little bit over 3 years in credit card debt, right? Credit card debt transferred to a HELOC. We use our HELOC, and this is the most important thing, as our main operating account. Yeah, we got to pay interest. It's a lot of debt for that HELOC. But if we're doing the Dave Ramsey way of having to save $1,000, and Dave Ramsey hates HELOCs, right? I mean, we just take a look here, Ramsey HELOC rant, and you got a video 6 years ago, more than 1 million views about him ranting about home equity line of credit. But would you rather have that home equity line of credit and pay $1,000 of interest, or possibly 3-4 grand of interest on month one, right? 3-4 grand of interest. So, and I got to do the calculation. I'll do the calculation for the next video of how much interest you're actually paying every single month due to Dave Ramsey way. But you take a look here again, 7 months, 7 months. Whereas month one, we could even have $1,000 emergency. Oh my goodness, we're good, because Dave Ramsey say, hey, you're going to get the noob emergency fund, newbie emergency fund, or beginner emergency fund. What I'm saying is that this is your line of credit. That's the non-beginner emergency fund. That's like the advanced emergency fund. You need $1,000, just take it from here. You're good, right? You're good. All right. Well, it's Korean Atlanta mentorship. Just another clickbait video with Dave Ramsey's face, and I don't know. Have I dispelled step one and step three? I say step two is pretty decent. Step four, you could decide to invest after all your debt is paid off after your house, or you just pay off your house, right? Either one is fine. You pay off your grow. Step five, college is a scam. No thanks. I'm going to take that one out. And step seven, I love giving, building wealth. Got to be generous, right? That's why I make all this free content. All right. Well, that's it, everybody. Again, another Dave Ramsey clickbait thumbnail. Maybe we might have some actual real life velocity banking therapy sessions. If somebody has yelled at you that you gotta save money, I'll just be your non-licensed fake therapist that will charge you $100 an hour or possibly more. All right, well, that's it, everybody. Have a great day, and we'll speak next time.